Welcome back. Today we're running through this week's IPOs. Two that just hit the market and one coming up next week, so you know exactly which new listings are worth watching. For each one, we'll hit the business, the IPO itself, the outlook, and an educational trade plan, so stick around to the end. Today, let's dive into Cardigan Inc., a dynamic player in the healthcare sector. Cardigan is a biopharmaceutical company that has its sights set on revolutionizing the treatment of cardiovascular diseases. What sets them apart is their focus on developing a portfolio of medicines that target the underlying causes of these conditions, particularly primary and secondary cardiomyopathies that can lead to heart failure. Using a cutting-edge research and development platform, they integrate AI-based tools with real-world clinical data and cardiac-specific analytics. This innovative approach allows them to optimize their clinical study designs, enhance patient screening, and track treatment efficacy more effectively. With the rising prevalence of heart diseases globally, Cardigan's commitment to advancing cardiovascular care could not be more timely. Moving on to the IPO details, Cardigan Inc. listed on the Nasdaq exchange on June 18, 2026. The company successfully raised a substantial $400 million. Setting the final IPO price at $16 per share. However, the excitement didn't stop there. As of the last trading session, Cardigan's shares are trading at $22, showcasing a strong market interest and a healthy premium above its initial offering price. This performance is indicative of investor confidence in Cardigan's innovative approach to tackling pivotal health challenges in the cardiovascular space. Overall, the IPO seems to have generated a buzz in the market, attracting attention from both retail and institutional investors alike. Now, let's discuss the outlook and potential trade plan for Cardigan. In the short term, the outlook appears quite bullish, given the strong trading activity and the enthusiasm surrounding their innovative approach to cardiovascular medicines. If you're considering an entry point, you might evaluate buying shares on any dips toward the $20 mark, especially if you believe in their long-term vision. For a longer-term perspective, keep an eye on their progress in drug development and any announcements regarding clinical trials, which could significantly impact their stock performance. However, it's crucial to remember that with any investment, there are risks involved. For Cardigan, key risks include potential regulatory hurdles and competition in the biotechnology space. So, make sure to do your research and keep an eye on the news as you navigate your investment decisions. First Carolina Financial Services Inc., trading under the ticker FCBM, operates as a bank holding company for its subsidiary, First Carolina Bank. This company is deeply embedded in the financial services sector, specifically within the regional banks industry. They offer a comprehensive suite of banking services tailored for both individuals and businesses, which includes checking and savings accounts, certificates of deposit, and various loan products. Additionally, they provide wealth management and treasury management services, making them a versatile player in the banking arena. Their commitment to serving clients with personalized financial solutions sets them apart in a competitive landscape. First Carolina Financial Services Inc. made its market debut on June 18, 2026, listed on the New York Stock Exchange XNYS. Initially, the company set its price band between $14 and $16, but the final IPO price was determined at $12.50 per share. As of now, the stock is trading slightly above its IPO price at $12.60, which positions the company with a market capitalization of around $381 million. This initial performance suggests that, while the stock has shown some resilience, it might also indicate investor caution, given the price being below the initial expectations. Keep an eye on how the stock performs in the coming weeks as the market digests this new listing. Looking ahead, the short-term outlook for First Carolina Financial Services Inc. might be a bit cautious, especially since the stock is trading below its IPO price. However, in the long term, there's potential for growth depending on the overall performance of the banking sector and the company's ability to attract new clients and manage existing loans effectively. For those considering an educational entry point, you might look to enter near the current trading price of $12.06 while keeping a close watch on the broader economic indicators that could impact their business. An exit strategy could be planned if the stock approaches the initial price band of $14 to $16, but do remember that market conditions can change rapidly. The key risk here is economic fluctuations that could affect loan demand and subsequently the bank's profitability. Today, let's dive into DPC Holdings Limited, an exciting upcoming IPO that's set to hit the market on June 25, 2026. This company is making waves in the technology sector, where they specialize in providing innovative solutions tailored to enhance operational efficiencies across various industries. While we don't have exact details on their specific products yet, their focus on technology indicates that they could be involved in areas like software development, IT services, or perhaps even hardware innovations. As businesses continue to seek out ways to streamline operations and adopt new technologies, DPC Holdings could be well positioned to capture a slice of this growing demand. It's definitely a company to keep an eye on. Now, let's talk about the IPO details for DPC Holdings Ltd. This upcoming IPO is slated to list on the XNYS exchange, aiming to raise a substantial amount of around $746.67 million. The company has set a price band for its shares between $28 and $32, providing a range for potential investors to consider. As it stands, since the actual trading has yet to begin, we can't confirm how the stock will perform post-listing, but this range provides a fascinating entry point for those looking to participate in the market. Keep your eyes peeled for updates as we get closer to the listing date. When it comes to the outlook for DPC Holdings, the short term could be a bit of a roller coaster ride right after the listing. IPOs often experience volatility based on market sentiment and investor enthusiasm. However, looking at the long term, DPC could have significant growth potential if they successfully innovate within the technology sector and capture market share. An educational entry strategy might be to wait for the stock to settle after the initial trading frenzy and look for a dip as a potential buying opportunity. On the flip side, if you're considering an exit, it could be wise to monitor the company's performance closely and set a target based on your risk tolerance. Just remember, a key risk here is competition and how well their products are adopted in the market. Something to keep in mind as you strategize. If this breakdown helped you out, do me a quick favor, smash that like button and hit subscribe so you never miss an IPO analysis. And before you go, please let me know your thoughts down in the comments. Where do you see this one heading? What's the high and the low you're expecting? Are you bullish or bearish, and would you actually buy it? And drop the name or ticker of any other stock or IPO you want me to review next, and I'll cover it in an upcoming video. This is for education purposes only, not financial advice. Trade safe, and join my free Telegram channel for daily alerts with exact entry and exit prices. The link is in the description.